All right. Today is Wednesday, December 22nd, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight, and we're going to keep it short and sweet here because this is the last show before the holiday. But rest assured, we have a lot to discuss here, specifically in the commodities market, and we will go over more charts than usual. The market is amidst the Santa rally, the so-called Santa rally. Yes, this is the Santa rally. What do you thought it's going to take you to the moon? Stocks up 10, 20%, not going to happen. But we are up about 3.5% from the bottom on Monday. This is a rally in my book. The market is acting exactly as we expected, of course, heading into this holiday trading week. Low volume and the path of least resistance is higher. Yet the concerns are still here, but we will revisit them later. After the festivities are over, you're seeing stocks moving via algorithmic buying, but specific stocks, individual stocks, also moving via options buying, call options buying that is, and it's easy to move these stocks higher in a shortened trading holiday week with low volume. We will go over these names in the heat map analysis, of course. And let's start the coverage already, starting with the performance. And here we go. The Dow Industrial Average closing in the green, up 261.19 points, or a gain of 0.74%. The Nasdaq also closing in the green, up 180.81 points, or a gain of 1.18%. The S&P 500 also closing in the green by 47.33 points, or a gain of 1.02%. You look at the volume, of course, lower than average, as expected, and the path of least resistance is higher. What about the sector's performance today? Every single sector closed in the green today, so we're not going to shame any sector of the market. But at number one, capturing the gold, cyclicals, aka Tesla, let's be honest. At number two for the silver, technology. At number three for the bronze, REITs. What about the advance to decline ratios for the market? NYSE 68% advancing versus 29% declining. The Nasdaq 55% advancing versus 41% declining. This is exactly what we anticipated ahead of time. Yesterday, we saw the exaggerated ratios to the upside. Over 80% of the NYSE issues were advancing. We said the issues will go down closer to the 50-50 line. And here we are. Moving on to futures. What's going on here? Massive rally across the board. When we talk about energy, crude oil prices recovered all of the losses from Monday. And soon enough, you're going to see a reading in the WTI and Brent of over 80. The WTI gained over 2.5% today. Brent gained almost 2%. Gasoline was up. So was heating oil and natural gas. Natural gas rallying higher by a little over 2%. And let's cover some news here for the energy market. Crude prices were rallying higher in the morning, but we had plenty of tailwinds to come. Number one was inventories. Inventories were down big. The expectations were that inventories would be down about 2.5 million barrels. Well, guess what? We were down almost 5 million. This is insane. And therefore, crude oil prices rocketed higher. On top of that, we have some geopolitical issues here, as Israel, as of late, been talking really tough against Iran. And the incoming Air Force Defense Minister, or whatever the hell he is, he came out today and said we can strike nuclear sites in Iran starting tomorrow. And if that happened, crude oil prices will explode higher because the so-called black market for crude oil, aka Iran, Libya, and Venezuela, have been substituting for the lack of output from OPEC, so a disruption to Iranian outflow will push crude oil prices significantly higher. Now, this is atypical of the Israelis, of course. Usually, they strike first and then they talk. They don't make threats. They strike right away and then they talk. My reading of all of this is a message to the Biden administration, to the U.S., because the relationship is souring just a little bit. And Sullivan, whatever he is, whatever he does, the lunch guy, the coffee boy for Biden, I don't know. But he was over there and said, you know what, we're not on the same page here. We're not going to be with you if you strike. So I believe that this is a message, a psychological message to the Biden administration, and the Israelis are saying we can do it on our own. We don't need you here. But if it happens, it will be a major source of concern here, and it will push crude oil prices significantly higher. And this will not be good for the market, by the way, because the market has a certain degree of tolerance of crude oil prices surging higher. The market likes crude moving higher right now because it is an indicator that the Pokemon variant is not an issue, and economic activity and the pace of growth is still intact. But there is an inflection point here. There is a threshold of crude oil prices. If they go to 85, And beyond that, then inflation expectations will move higher again. What does that mean? It means the Fed will become more hawkish. This is what the market doesn't like. So we'll keep an eye here. We also have news on the Russian front regarding natural gas. And I told you from the get-go, this is Putin playing tough. He wants to score a deal. It's a bluff for now, keyword for now. If he does score a deal for the pipeline between Germany and Russia, then no invasion will take place. But if that pipeline is sanctioned, then we're going to have a problem. And for now, Putin's saying, you want to talk? Let's talk. Next month, let's talk, and we'll take it from there. The problem is natural gas prices are probably bottoming for now because the winter forecast is coming out colder than expectations. They told us it's going to be a warm winter. Bullshit. When they say it's a warm winter, prepare to freeze your nuts. Anyhow, back to the futures. What's going on with softs? We have gains across the board. The exception here is OJ. OJ taking a leg down just a little bit, not by much. I'm out of the trade. It was a massive rally in a short amount of time. It is reasonable to expect OJ to take a retreat here. Likewise, we have lumber and cocoa pretty much in the flat line, yet we have massive gains led by coffee, sugar, and cotton. We have some news about coffee. I don't know if you noticed it or not, but your coffee prices are surging higher. And keep in mind, there is a delayed effect here. When coffee futures surge higher, say today, you're not going to see the impact until a few months from now. And coffee futures are exploding higher. And we covered the chart in this channel a few months ago. I told you we will see a massive rally in coffee futures here. On top of that, it's not just the weather in Brazil or the output, yada, yada, yada. It's also a shipping problem. There is a shortage of containers, believe it or not, shortage in ships, not the chips, but the actual ships that carry the containers. Just to be clear, there is a shortage of truckers to transport those coffee beans. So we have a logistic problem here on top of the weather problem and the output problem. Therefore, we have the so-called thupathaco in coffee bean prices. And I say, you know what? Forget about shipping here. Who needs shipping? Who needs to drink actual coffee? Just deliver them via the metaverse. We will drink the coffee virtually. Anyhow, what about metals? What's going on here? We like gold. Gold is moving higher now. So is silver, platinum, copper, palladium, all moving higher. Massive rally in palladium and platinum as of late. You can play platinum futures via the South African ETF, or you can buy a particular platinum mining company, which is also included in the South African ETF. If you want to play palladium, you can buy the Russian ETF, but I would caution you from doing that because we're not out of the woods yet. It could get ugly here if the talks fall apart in January. What about meats? What's going on here? Live and feeder cattle futures on the flat line, while lean hogs, the new big tech, moving higher and gaining a little over 1% today. What about grains? What's going on here? Watch out for wheat prices. They continue to move higher. And this is, of course, frustrating the French. Soaring inflation in Europe is starting to squeeze shopkeepers and consumers. In France, the traditional baguette will get more expensive and some cheese prices are expected to rise 20% in the new year. Why? You might say, wait a minute here. I thought inflation is going to cool down. Why are they raising prices next year? The answer is the delayed effect. Wheat prices surged higher in the last few months. You're going to see that impact next year, not right now. Next year, you're going to start to notice it. And you know what? The French are livid. But I always get excited when the French get livid. Anyhow, back to the futures again. We have gains across the board for grains. Soybeans up, soybean meal, soybean oil, corn, wheat, rough rice, oats. Oats is surging higher today. The only loser is canola futures, closing slightly in the red. Moving on to the big casino, the options market. What's going on here? And by the way, Barron says, the options market is now a casino. Here's how you bet wisely. Just heads up, it has been a casino all along. We've been calling it the big casino all along. Of course, the retail crowd went crazy with the options gambling. Folks, options are derivatives of stocks. They're meant for de-risking. For example, if you don't want to commit the capital to buy a stock, you can buy call options and see how it goes first before you commit the capital. This is the main purpose behind options. But I know you and I are not going to listen. We're going to gamble anyways, right? Buy weekly options out of the money. Shoot your shot, let's get rich fast. Until you lose it all, of course. But in the meantime, the casino was hotter than usual today because we have Apple at number 1. Per usual, of course, the hottest table by far, trading about 1.6 million contracts today. About 75% of those were calls. At number 2, Tesla, the souffle, and the volume surged higher today for obvious reasons that we're going to cover in the charts analysis. But regardless, Tesla at number 2 with about 1.3 million contracts traded today. About 62% of those were calls. At number 3, Pfizer. Two people listened to Dr. Fauci yesterday. He said buy Pfizer calls. Well, guess what? Pfizer is surging higher today, not by a lot. But we also had good news about the pill and the approval from the FDA. Yeah, like the FDA, who's funded, by the way, by Pfizer, is going to reject their pill. Not going to happen. But Pfizer saw heightened activities in the options market with a little over 500,000 contracts traded today. About 76% of those were calls. What about the unusual activities that took place in the options market today, starting with the ticker XLE? And this is for the energy ETF. They're buying puts here. They're dumping energy, buying the 51 puts for the expiration date, January 21st, with expectations that the name could drop down by more than 7% by then. They paid about 55 cents apiece to enter this trade, all in all, spending about $1.4 million. And what about the ticker NOVA for SunNova? This is for solar, of course. The name is down about 40% year to date, but we're seeing some activities here in solar stocks as of late. My name is Sunrun, but I'm not that bullish on solar either way. But if I had to pick, I'll go with Sunrun. Anyhow, in this case, they're going with Nova, buying the 30 calls for the expiration date, January 21st, with the expectations that the name could pop higher by more than 14.5% by then. They paid about $1 a piece to enter this trade, all in all, spending about $1 million. What about the trade for the ticker AMC for, you guessed it, AMC apes? Not doing so hot so today, and somebody is fading the name, perhaps a fellow ape stabbing you in the back, by buying the 27 puts with the expiration date, December 31st, with the expectations that AMC could drop down by more than 6% by then. They paid about $1.37 apiece to enter this trade, all in all, spending about $800,000. And lastly, at the bottom of the table, what about the ticker PINS, Pinterest? You want to talk about beaten down? This name is way beaten down. But somebody's buying the dip here by buying the 41 calls for the expiration date, January 21st, with expectations that the name could pop higher by more than 10% by then. They paid about $1.15 apiece to enter this trade, all in all, spending about $600,000. Moving on to the heat map analysis. What's going on here? Well, the obvious is buy Pfizer, short Moderna. As Dr. Fauci said, Pfizer up, Moderna down. And of course, Tesla popping higher. We'll talk in the charts analysis, but all in all, the market is moving and behaving as we expected exactly. The path of least resistance is higher, but it is slowing down from yesterday's mania, meaning we have few winners today. The pops are not as crazy as yesterday. They're going to continue to cool off. So perhaps we might have a red day tomorrow, doubtful, but it could happen. But we do have a few winners here. And I tweeted this: investors are doubting the impact of the variant on economic activities. They are buying the dips in airlines, cruises, and event stocks. And this is exactly a typical behavior of retail traders who see the opportunity in these names. When they dip, they buy them, they're cheap, the options are cheap, they move higher, they move violently higher or to the downside, and retail is into that. But we're seeing winners here. Cruises up big today. The rally so far was led by Carnival Cruises, the ticker CCL, because the CEO came out on Monday and said, you know what, the cancellations are not that bad. We'll see how that works out. I'm not a fan of cruises. They're zombie companies. When the Fed raises interest rates, they're going to blow up right away. But they're buying them regardless. They're also buying airlines. Airlines were up today, although be it not as high as cruises. We also have a rally in Live Nation, the ticker LYV, shooting higher today. And of course, this is due to the sentiment. The media says infections are all over the place. People are dropping. Cases are rising. But investors are saying, you know what? If these names go down, we're going to buy the dip because the thing is not really that serious right now. And therefore, a name like Live Nation is popping higher. Likewise, hotels also popping higher. Marriott, an insane rally, defying all logic, of course. I used to own the name, not anymore. We covered the earnings for Marriott, by the way. They're not doing so hot so. They still have more ground to cover to catch up with 2019 numbers. But look at where the stock is trading right now, above the pre-pandemic high. So we have a little bit of froth here in these names, but that's not going to change until the sentiment changes. For now, investors see these dips in any hotels, cruises, airlines, events as an opportunity to buy. And the thesis is we have a massive pent-up demand. And perhaps the Pokemon variant will be good for us. Why? Because it will get us closer to herd immunity. If that happens, then we will see massive spending in airlines, cruises, events, yada yada yada. This is the thesis, of course. But you have to keep in mind, a lot of that is already priced in these stocks. And then we have another winner, Abbott Laboratories, the ticker ABT, and I tweeted this yesterday when Biden was speaking. All I got from his speech, by the way, is go all in buying Abbott calls. Because he's like, we're going to spend $15 million on this, $500 million on that, $1 billion in here, $5 billion there, right? All in testing and all of that. And this is good for Abbott Laboratories. They are the leading providers of testing kits, and therefore the stock is moving higher today. It's an excellent name to add to your portfolio. At any moment, it is still a value name. Then we have the ticker BX, Blackstone, also popping higher, significantly so today. No news here, but if you look at the chart, the name is severely oversold. You look at the RSI, way oversold. So we're seeing a pop here, short covering, oversold rally in Blackstone. The criminal organization, of course, of Blackstone. Then we have one of my favorite corners in this market, SHIT, aka fertilizers. They've been on a consistent rally here. One of the top performers. Whether we're talking about Mosaic, whether we're talking about Nutrien, whether we're talking about Corteva, which did not rally today by much, but you look at the gains for Nutrien or Mosaic, impressive. And this is a sign that natural gas prices will continue to move higher. And understand this, do yourself a favor, by the way. Pull up a chart of MOS, Mosaic, and look at the performance of Mosaic before the crash of 2008-2009. The name exploded higher. These are the kind of names, the late stage kind of performers. Moving on to charts, starting with the SPY 30 minutes chart. What's going on here? The futures were kind of weak in the morning, but as soon as trading opened, straight line to the upside, not looking back, autopilot. Where did we stop? We stopped at 466.5, going back and forth, back and forth, back and forth, doing what? Gathering energy to pop higher. And this is exactly what happened. And now the SPY is trading above 466.5. Ask yourself a question, is this bullish or bearish? The answer is it's bullish because the chart recaptured an important support line, 466.5. This was not an easy endeavor, by the way, but the chart has done that in less than 2 days, and therefore this is a bullish behavior. Here's the problem though. We are still overbought. Matter of fact, more overbought than yesterday. The challenge is, yesterday the chart was overbought in the 30. When we look at the 1 hour, the 2, the 3 hours, not so overbought. Well, now we're getting overbought on the longer range charts. The hourly, the 4 hour, not the daily though. And therefore, you're gonna work those overbought conditions one way or the other, either via consolidation or a pullback. After a massive pop like this, we will pull back to correct those overbought conditions. But you gotta keep in mind, we are in a holiday shortened trading week with low volume, and the path of least resistance is higher under low volume. But the technicals are important, and the chart doesn't need a massive pullback, a flush down to correct those overbought conditions. Specifically on a 30 or 1 hour chart, a gap down, a little bit of a pullback, a little bit of consolidation will do the job. And of course, in these 3 scenarios, a gap down, a pullback, or consolidation, which one is the bullish one? The answer is consolidation, meaning if the chart consolidates tomorrow, for example, to work out these overbought conditions, that means the market wants to move higher. It is a bullish behavior. If you gap down and then fail to close the gap by the end of the day, then this is a bearish behavior to work out these overbought conditions. If you pull back, it depends. Are you pulling back by much? Are you losing support lines or not? Losing important support lines is bearish. Holding the support line is bullish. And these rules, by the way, not just applicable to this chart. You can use these rules in any chart. But I do have a feeling here that we're going to have a red day tomorrow. Because after all, Santa likes them red, right? And don't we all like them red? I'm asking the gents, of course. Anyhow, we're moving on to the daily chart for the continuous contract for the SPY. What's going on here? The deed is done. It is under low volume. It's not fair for the bears, but who cares? The deed is done. The chart is trading above 4,657, and now this is support. Notice how the momentum indicators are not popping by much. The momentum indicators remain neutral for now, giving the bears a glimpse of hope that the pain could resume after the holidays. Why aren't the momentum indicators moving by much? The answer is the volume is way down. The volume has cooled down by a lot. This is, of course, supporting the bulls to move these charts higher. And here's one thing you got to keep in mind. What if this a higher low? Is this bullish or bearish behavior? The answer is it's bullish. So you're not going to short the SPY right now until and unless you have a clear reversal candle. And you can confirm that, of course, by the VIX. By the way, the VIX is your most important leading indicator right now. If you understand how the VIX is working, you're gonna nail trading the market. What about the Qs? 30 minutes chart. What's going on here? The pop goes on, but so is the overbought reading on the RSI. It was evident on the 30 yesterday, not on the hourly. Now it is evident on the hourly, and therefore, the more charts you have oversold or overbought readings in, the more likely you're going to have a reaction. We're beyond the support zone for now. The Qs eyeing like a magnet. Eyeing what? 397, because this will be a major win for the bulls, recapturing 397, the most important line for support/resistance right now. Now bear in mind, once again, this is a holiday week, the last day of trading. In all likelihood, you're not going to see a massive flush down or the market selling off. The Dow is down 500, 600, not going to happen that way. It could, all options are on the table, but rationally, the seasonality says it's not going to happen. We could see a pullback, we could see consolidation, we could even see a gap down and then refill. All of these are options to work out the overbought conditions on the RSI. And if we do, where do we go here? If we pull back, we go down to the support line, which happens to be the support zone for now. But if the market wants to really stretch it here, it will give it a shot at 397. It's a long shot, but it could happen. And if it happens, by the closing of the market, I will go all in buying puts for next week. Moving on to a daily chart for the continuous contract for the Qs. What's going on here? We are now trading above 15,975 solidly. The problem is we are still below the neckline, the head and shoulder formation, so we have yet to face real resistance in this chart. The momentum indicators are strengthening, about to reverse the negative divergence, and the bears might say, you know what, the bulls are cheating here. They're doing all of this progress in a holiday week with low volume. This is cheating. Who cares? It counts. And the bulls know exactly what they're doing right now. They're taking advantage of the seasonality. And here's another way to look at the chart. This is the bullish bias, of course. What if this is a sloping line of resistance? We have the double bottom, and the chart is working its way to break above the sloping line of resistance. This is one of the most bullish patterns out there. I'm just presenting the case here from both sides. The bears still have the head and shoulder. The bulls have this pattern. What about the IWM, the Russell 2000? What's going on here? Still overbought in the RSI. It did not go all the way down to 218, but for now, we know that 218 is solid, at least for now. Breaking below 218 will be a problem. We have a gap below, and that gap will be filled 1,000,000%. I can't tell you the timing, but it will be filled. The resistance for now remains 223, the support at 218. You're gonna ride the wave until there is a reversal. And how do you know there is a reversal? Well, you look at the support line. Where is the support line? 218. You're not going to short the IWM unless you see a break below 218 and a rejection, and then you can short the IWM once again. What about the Dixie? What's going on here? Losing a little bit of steam, but still within range. And we know that tricky Dixie plays dead and then it pops higher again. So I'm not playing this game for now. I want to see the Dixie breaking 96 for support, and then we're talking, because I got fooled before. You're not going to fool me again. What do I mean by talking, by the way? I mean commodities, specifically gold. The main topic of this video, by the way. The sleeping giant. Is it rising again? My hunch is yes. Look at the daily chart, for example. We have a confirmation for now that this is indeed a bull flag formation. What does that mean? We're moving higher, and we're eyeing the Fibonacci level, the 3 amigos. This will be resistance once again. And if we break above that, then we have the sloping line of resistance in yellow. So we have a lot of resistance here ahead. Here's the take though. If all of these resistance levels are broken, we're talking about the 3 amigos. We're talking about the Fibonacci level. We're also talking about the sloping line of resistance. If all of these three are broken, gold will explode higher. When you think about it, psychologically speaking, we are at an inflecting point in this market. We know the Fed is tightening. We know the economy is starting to slow down here. We know that stock market valuations are not supported anymore. When I look at my portfolio, we have stocks up 80, 60, 70%. It's irrational. I'm going to take profits and close all of these positions by the end of the year, of course. What do I do with the cash? Cash is an option. I don't buy the Tina bullshit, by the way. Cash is an option. The problem is, the longer you hold cash, the more you're diluting your wealth because inflation is eating it away. But what do you do here? You buy bonds? Not right now. I want to know the shot for sure. You buy cryptos, maybe a little here and there, but that is also too risky. You buy commodities, maybe in a late cycle, late stage, but you have China slowing down. So how long can you juice that one? What do we have left? The answer is the old man, the old school, gold, the real safety. Now, the rally is not going to happen until and unless more investors start to think like me. If we have a consensus that, you know what, at this stage, we got to go back to gold, then gold will pop higher. Significantly so, specifically if the dollar starts to weaken. When we look at the weekly chart for gold, for example, we have a sloping, descending line of resistance. We had the spike top. That was a top, a strong one. Spike tops are always strong tops. They last for a long time. Look at the chart of Zillow, for example. We have one here in gold. After the spike top, gold has been consolidating. We have a sloping, descending line of resistance. And then we have what? What it appears to be a saucer bottoming behavior. What does that mean? You combine the two, you put two and two together, and you come up with the conclusion that perhaps gold will break above the sloping, descending line of resistance. And if that happens, all of that energy that has been gathering for what? Over a year now? A year and a half? That energy will be released violently to the upside. Here's a monthly chart for gold. Is what we're seeing right now a formation of a cup and handle? And if it is, then gold will pop higher. So this is my case for gold, by the way. And I know some geniuses in the comments are saying that I'm Peter Schiff, yada, yada, yada. The facts are I've been bearish gold since this channel started, by the way. Almost. I only became bullish gold about maybe last week? 2 weeks ago, so calling me Peter Schiff is kind of, I know it's funny, but it's not accurate. But anyhow, let's cover some gold miners. Somebody asked me about gold miners. Let's cover some gold miners. Starting with the ticker NEM for new mount, we have 53 as support. This line has been tested over and over and over and over again. Ask yourself a question here. If the chart wanted to trade below that number, it had plenty of opportunity. Why would it break that support line right now? Does it make sense? If anything, it means that we have a solid support. We have a process of gathering of energy from this consolidation. That energy will be released to the upside. Again, I do not guarantee anything here, folks. Matter of fact, if you listen to me, you're probably going to lose money. So just do the opposite and let's see how that works out, right? But anyhow, here's another chart for FNV for Franco-Nevada, another gold miner. Last time we covered this chart, we talked about the head and shoulder formation, and indeed the chart broke down. Here's what I see. Perhaps this is another head and shoulder formation. But if I take the bear glasses off and place my bull glasses on, what I see is we have a trend line since the March bottom of last year, and this line has been respected. It hasn't been broken. It could be broken, and if that happens, abandon, get out. But so long as this line is intact, the assumption is we will move higher in this chart. Not my favorite miner, of course, but it's one of the biggest. Here's my favorite one because it is more diversified. It's not just gold. They have lithium and other metals, Wheaton, precious metals. I bought the stock before and I sold it. You see that circle, the highlight? That was a topic formation. We talked about it in the program before. I dumped right there and then. But I'm starting to like this chart again because what if we're seeing right now is a formation of a cup and handle, which will move this chart above 47, the prior resistance. These are just ideas, folks. Study them, do your homework, and make up your own conclusions. Moving on to the 10-year yield, what's going on here? We hit 1.5%. This is the resistance, of course. We did not get rejected yet. For all you know, the 10-year is just building energy for now to pop above 1.5% and catch it for support once again. Now, the stock market likes this. Not financials, of course, but specifically tech, the NASDAQ. The NASDAQ likes the 10-year to be cool, no massive pops one way or the other. This is good for the NASDAQ. If the 10-year starts to pop higher, above 1.6, 1.7, then the NASDAQ is going to throw a fit. The setup is bullish, folks. We have a higher high. We have the momentum indicators strengthening, still in negative divergence, but they're moving higher. The assumption is sooner or later, we're going to see the 10-year yield reading above 1.5%. Not a big deal for the NASDAQ. It will be good for financials, of course. The problem is, what if it continues to move higher impulsively so? Then we got a problem. And here's a weekly chart for the TLT, catching support from 149 exactly Matter of fact, here's a daily chart. You can see it right there and then, bouncing from 149 to the penny. So the debate is not over here. TLT popping higher, while the 2-year yield popping higher, hand in hand. That means a recession coming. On the other hand, if we see the 10-year yield moving higher and therefore the TLT moving down, because you got to understand this, we have new investors all the time in this channel. Bonds have an inverse relationship between price and yields. TLT tracks price. When price goes higher, the yield goes down. When yields move higher, price goes down. If the 10-year yield moves higher, that means growth is intact in the economy. And this is what the market is liking for now. The re-steepening, I should say, of the yield curve. Of course, the market is going to like it to a point. If the 10-year pops above 1.6, 1.7, 2% rapidly, then the fit will start. And therefore, I say we have the NASDAQ dilemma here. The big cap / the high growth, high momentum dilemma. If the 10-year yield crashes, indicating an upcoming recession, these names will crash, as we've been seeing so far when the 10-year was moving down. But even if the 10-year moves higher, there is a threshold. I don't know what it is, 1.6, 1.7, 2%, or higher yields going to crash the NASDAQ and the high valuation names and appreciate the value, low multiple kind of names, the boring boomer kind of names. This might sound confusing to you. If it is, please ask questions. What about the VIX 4-hour chart? What's going on here? We have broken below the gap, 2158. That is lost now. And the VIX broke below 20 today. Let's clean up the chart here to see it better. What do we see in the MACD indicator? By the way, this has been the most accurate market indicator so far. Spot on, year to date. Spot on. Every time we have a crossing to the positive side, creating green impressions on the histogram, we see a double-digit pop in the VIX, which comes hand in hand with a dip in the SPY, and vice versa. What do we see now? The MACD is reading negative. We have red impressions on the histogram. What does that mean? The SPY is still the favorite here. You have to assume that the SPY will go higher until and unless you see a reversal in the VIX, recapturing 20 as support, and you start to see green impressions on the histogram of the MACD of the VIX with a 4-hour chart. Absent of that, you have to assume that the SPY will continue to move higher. What about Apple? What's going on here? A daily chart recapturing the support for now, which is 172.41 or 1.72.5. Doesn't matter to me. It's a zone, and that zone has been recaptured for now. The problem with Apple is you can do the stealth rally for now on low volume, but look at where the momentum indicators are. They are in negative divergence. What does that mean? Sooner or later, the pain will resume. That gap at 165.32 will be filled 1,000,000%. If Apple continues to go higher for the remainder of the week, meaning tomorrow, how high can we go in Apple? For that, we go to a line chart. You see the sloping line of resistance here. If we pop higher again, we have about 1% left before hitting resistance again. So we'll see what happens and take it from there. Next, we have a daily chart for Tesla, the souffle, popping higher. There was a lot of short covering today for the obvious reason, of course. Elon Musk came out yesterday and said he's done dumping. The problem is the filings in the SEC say he's not dumping. He's going to get himself in trouble here, because Gary Gensler wants to act tough, of course. The problem is Gary Gensler is suffering from a severe case of narcolepsy. But let's assume that he's awake. Elon came out and said, I'm done dumping. If he dumps again, it's going to be a major problem. And by the way, we had some bad news for the souffle here, because they're allowing you to play video games while you're driving the vehicle. Genius. And this is, of course, not just endangering souffle drivers, but the rest of us. And finally, the regulators are waking up and cracking on Tesla allowing video games while you're driving. But back to the chart, we had a resistance today at 995. It wasn't a severe resistance today. It did not hold, and the reason is the short covering was extreme. Lots of profit taking here. Those who shorted at 1,200, 1,100, 1,000, they scrambled in the morning and they started to cover because Elon said, I'm not dumping anymore. The thesis from shorting was Elon is dumping. Well, he's done now, so you close the shorts right away. And therefore, it did not respect the resistance line. Although, if you turn on the 1 minute or the 3 minutes chart, you will see it struggled for a little bit and then it went down, retested that line, and popped higher again. For now, is the chart bullish or bearish from today's behavior alone? The answer is it's bullish. Look at the volume. It's higher on the buying side. It is trading above 995. The momentum indicators are curling back up, strengthening. What does that mean? If you're short and your thesis was Elon is dumping, you gotta cover because the bulls have the advantage for now until and unless we see a reversal signal, a solid reversal signal. We don't have that yet. Moving on to tulips, Bitcoin, what's going on here? I like the setup for now. I told you that. We have a saucer bottoming formation. What does that mean? Sooner or later, Bitcoin should pop higher. The momentum indicators are getting stronger. But I don't have strong conviction yet that Bitcoin will indeed pop higher. Why? Because we were, keyword were, in risk off mode. We're not yet in risk on, which is positive for Bitcoin and other cryptos. Yes, the market is rallying higher, but we have the Santa rally, the seasonality. You cannot assume that we are in risk on again. Therefore, I'm not buying Bitcoin. I'm playing this via Coinbase, the ticker COIN. The last time we covered the chart, we had the saucer top, and since then, the chart dropped down big. And now it is oversold. Look at where the RSI is. Look at where the MACD is. But we're getting stronger. So you buy it via calls. If you lose all the calls, all the premiums, who cares? You did not invest $50K a piece in riding this one higher. And then you eat a pie in the face. And therefore, we're using options to de-risk. This is the main purpose, by the way, for options. De-risking. You buy calls, you buy the premiums. If it works, you make big bucks. If it doesn't work, you just lost the premium. That's all there is. So the assumption here is if Bitcoin pops higher, then so will Coinbase. And we have resistance line number 1 at 264.46. That will be profit-taking target number 1. Profit-taking target number 2 will be around 284. And that should be enough here. All the oversold readings will be corrected by then. Then, what about AMC, apes? What's going on here? Not a good day for the apes, but it's not the end of the story yet. We have 26 for support, and perhaps we're just working the overbought conditions on the RSI, and then AMC pops higher again. I would be more comfortable here if AMC recaptured 32 as support. Right now, no conviction here, because at any moment you could flush down or lose 26 for support, and then we got a major problem. The apes are doing the job. They're buying calls, lots of calls, but that's alone not going to move the stock higher. You need to buy the stock. But at this stage, it's really risky. Who wants to buy the stock at this point? Spending 30, 40, 100,000 buying the stock, you're crazy. And you need more apes to do the same with you. Therefore, sooner or later, folks, this is going to fall apart. Without solid support, without another mania, another rally, another stampede of buying. Lastly, somebody on Twitter asked me about NEO. They're holding the bag in NEO, so let's see what's going on here. Here's a weekly chart for you. We had what it appears to be a head and shoulder formation. Not the cleanest formation here, but regardless, the cleanest formation is a sloping, descending line of resistance. We got rejected once, twice, third time, fourth time, fifth time, over and over and over and over again. And most importantly, the line in the sand, 30.5, was broken. So this weekly chart is extremely bearish. NEO has more downside to come, but when we switch to the daily chart here, it is oversold. It is attempting to reclimb 30.5 and reclaim that as support and perhaps give it another shot to crack above the descending slope line of resistance. My advice here is don't expect NEO to trade at 60, 70 bucks again. That's not going to happen. That's a mania. That was a bubble. And it's over. Maybe a few years from now, you're going to see NEO trading at 60 or 70 bucks. For now, your goal should be to reduce the size of bag you're holding. So let's say NEO reclaims 30.5 for support. It continues to move higher, perhaps reaching 34, 35, and then it gets rejected again from the sloping line. You get out, you reduce the size of bag you're holding, and you move on and you find a better trade here. But if you're going to wait and wait holding the bag, waiting for the chart to pop higher again in another mania stage, that's probably not going to happen. And sooner or later, you're going to look back and say, you know what? I should have dumped at 35 or 34. That was a good price because right now NEO is trading at 18. You see what I'm saying here? One of the top skills in investing and trading is knowing when to cut your losses. A lot of people talk about, give me the ticker, bro. This name is going to pop higher. This is the best idea to buy. Here's the technical formation. Here's the option trade, yada, yada, yada. But the number one most important skill in investing and trading is knowing how and when to take your losses. You bite the bullet, you take the loss, and you move on. Because the longer you're in the tunnel vision, being emotionally attached to one trade or one investment idea, the more you're going to lose. For example, a lot of options traders, they buy a certain option, a call out of the money, or a put out of the money, weekly expiration. It goes the other way. Now they're losing 40, 50, 60%, but they're emotionally attached to the trade and they continue to add to it, lowering the entry cost, expecting that the trade is going to work at some point. Wrong. The number one skill is knowing when to cut your losses. You say, you know what? I had a thesis, I had a goal, I had a target. It did not work. I'm down 50% right now with a short amount of time before expiration. I'm better off taking whatever is left in that particular trade, the 50%, and use that in a better trade, and I will make up for my losses and then some. If you can master that skill, you will do phenomenally better in your investment and trading journey. Anyhow, we're moving on here, the conclusion of this video. What do we have on the economic calendar tomorrow? We have a lot. We have the initial jobless claims for the week. This will be important. Then we have personal income, consumer spending. We have core inflation. We have PCE inflation. This will be the most important reading, of course. And then we have durable goods. We have new home sales, the University of Michigan Consumer Sentiment Index. All of these will be important. They might move the market, but remember this. It's a holiday week, so the impact is not going to be as significant due to low volume. And here we are, folks. This is the last show before the holidays. Merry Christmas, Happy Holidays, enjoy the festivities. And I always have to say this, it is a time of joy for most of us. But there are others who are spending the holidays alone, or facing depression, perhaps financial problems, or any other problems. And I say you're not alone. I've been in your shoes before. I'm the king of depression, and I have spent countless Christmases alone. It's not easy. It's a tough time. But there is always the light at the end of the tunnel. Always. And you gotta remain hopeful. You can never lose hope because it always gets better if you have the will to do so. Once again, folks, this is all I got for you for now. We're gonna talk on Sunday. In the meantime, keep an eye on the channel. I might release some videos. I have some phone calls from Senator Bernie Sanders. Even Senator Manchin might call. Reverend Elon is going to call. Jeff Bezos will call. Gary Gensler will call. Even disgraced fund manager Gordon Gekko will call. We have a lot of phone calls, so keep an eye on the channel. And this is all I got for you for now. Thank you for listening. Thank you for watching. Merry Christmas. Happy Holidays. I will talk to you again on Sunday.